Morning, everyone, and welcome to my talk on technology marches on. And they say that every good talk starts with a question, and my question to you guys is, are you ready? Well, are you? So I will let you ponder that. I see some heads shaking over there. I'll let you ponder that as I go through some of my perspectives on technology today. But just to quickly get to know people in the room here, brokerages, if you could just raise your hand. People from brokerages, brokers, okay, fantastic, vast majority. I see James in the audience here. Good to see you, James. We've got people from technology, some of my colleagues here. Do you have any lenders? No lenders, good, we can have a private conversation. Okay, so my name is Pradeep, guys. I'm Director of Digital from Finova. Technology really excites me. I love technology. I love kind of sort of peering around the corner and see what's coming along the road and what sort of impact it's going to have on society and our businesses and so on. And my role at Finova is largely around innovation and looking at new technologies. It's partly innovation, as I say, and it's also about executing digital product strategy. So I enjoy this role at Finova. They actually pay me to do something that I would do anyway, so it's quite good. So Finova, for those who may not have heard, we are a technology provider, the #1 mortgage systems provider to the UK lending market. There's about 60 lenders in the market that use our origination platforms, and we also offer broker CRMs and client portals and a number of digital tools to the broker community, and we have about 3,000 plus brokers using our systems. In terms of mortgage origination, there's about 75 billion a year. That's about 25% of the mortgage market. That's actually originated through our platforms. So that's Finova in a nutshell. So what I want to be talking about today is technological change. Technological change, I guess it brings a lot of opportunity, and change is good, isn't it? As long as we sort of adapt to it in an intelligent way and make it work for us and use it to survive and thrive, it can be a great thing. But it's also potentially a scary thing, and change is always scary. And there's been a lot of change in the recent years, hasn't there? There's been the pandemic, now there is war, there's inflation, cost of living crisis, what's next? There's a lot of change. So we as a technology company, we've been thinking a lot about how do we respond to all of this change going on? How do we really help the mortgage industry that we serve, the thousands of brokers that we serve, the small and medium-sized enterprises? How do they respond to this change? And so what I want to talk to you about today is some of those perspectives that we've gathered and our kind of highlights on what we think is all this change going on and how can we sort of use technology to help address that change and respond in a positive way. So, let me click start my slides. So I want to start with some of the key drivers of change, right? Obviously the post-pandemic norms, they establish a different pattern of living and working. Let's talk a little bit about that. The second driver of change is technology explosion. We've had a lot of that. We'll delve into that a little bit. And finally, I want to talk a little bit about changing consumer expectations and what that means for mortgages. So let me start with an assertion that in the post-COVID-19 world, digital adoption will accelerate like wildfire. I don't think that there is going to be too many surprises about that assertion, but let's start with a couple of statistics that back that up. The first one is a YouGov statistic that says that 57% of us want to continue working from home post-pandemic. Again, I don't think there will be any surprises there. Workers have found that it's actually a lot more efficient working from home. Employers have found that it's a lot of cost saving and productivity is generally as high if people are managed well. So it's a win-win all around. And of course, it's not going to work for everybody. It's not going to work for every industry. But certainly in IT, I think that is certainly the case, and also in a lot of professional services. So that's certainly a big change that we're seeing. That's all well and good, but is that here to stay? Is that a trend? The jury's out, we don't know. There's a lot of change happening. But at least there's one statistics from McKinsey and Company that tells us that 92% of people intend to continue purchasing online post-pandemic. In many industries, many sectors, the adoption of digital has accelerated, particularly in e-commerce. And I don't think that's going to be that different for financial services. So that's something that we need to prepare for. It seems sticky. It seems like it's a trend that's here to stay. Now, coming back into the mortgage market, we all know that this is how brokering mortgages used to look pre-pandemic, right? We're all brokers. We love to put on our suits and invite our clients into plush offices and have a face-to-face conversation, build rapport, impress them. You know, it's a human business. But in the last few years, broking has been a bit more like this. And that hasn't quite been by choice, but just because we've been forced into it by what's going on around us in the world. This remote environment, there is a lot of technology out there, but I don't think the adoption was there to set us up in the right way to handle this efficiently. And this may not be the only way that it's going to be going forward. Obviously, things are opening up. But I think it is going to be a substantial way that we're going to have to operate in the mortgage market going forward. So that has had its challenges, right? So 30% of brokers have faced difficulties because of their reliance on paper documentation. There is still a lot of dependence on paper documentation. There is a lot of technology out there, but I'm afraid to say the adoption from brokers is actually poor. We as a technology provider, we know that we have challenges. My personal broker, one of the most, he's an award-winning broker in the mortgage market, fantastic advice, fantastic customer service. I've been dealing with him for the last 10 years, and his use of technology is zero, very little. Even today, he sends me all this stacks of stuff on email that I need to sign, and he expects me to print it out and sign it and scan it and send it back. I don't have a printer or a scanner at home, so I'm just fiddling there with like Adobe Photoshop and all these other things and trying to scratch digital signatures. And it's a mess. It's really quite unnecessary. The technology is there. There's another statistic that found that online fact-finding is expected to grow fivefold post-pandemic. Now, online fact-finding, again, that's basic technology that's been around for a very long time. We offer it. Many of our competitors offer pretty good digital fact finds, but the adoption is low. Most brokers still send out those old Word forms where you have to like go through every single question and figure out what's relevant for you and what's not and so on. It's a difficult customer experience. But on the other side of the coin, you've got 90% of consumers saying that they would be more than happy to be served their mortgage application process remotely. So there is a big mismatch over here. There's consumers who are saying we want this digital service, we want the customer to be served online, but then we have very little adoption from the supply side of using that technology. So the remark I would like to leave that section of the talk with is to just say that, look, I think brokers must take better advantage of digital tools. And maybe in the question time, we'll come back to what your opinions are on that. Do you think that it needs to improve in the market out there? What's the friction? Or maybe you think you're already adopting all of the technology out there. Let's have a chat. So moving on to the second driver of change, there has been a huge explosion of technology. Right. We all know the venture-funded market. There's lots of investors. There's fintech. There's prop tech. There's reg tech. There's every kind of tech out there. Tons of startups. The established companies are innovating. What does all of that mean for the mortgage market? Let me just show you a bit of a view as to how much technology innovation is really going on. Since there is so much, the analysts in the market have started putting together something that they call a technology market map. This is a market map of the mortgage technology space. There's little buckets over there. You will see digital mortgage brokers on the corner over there. You've got the Habitos, the Trussels, etc. of this world that have taken a completely digital approach to brokering and doing quite well. We have digital lending companies Like, there's more of them in the States. There's new ones coming up in the UK. There's Molo, there's M Squared, and so on. And these guys are doing extremely well with the direct-to-consumer model as well. One of the key things that's going on is that people are shifting predominantly online to research their mortgage options. There's a recent statistics from HSBC that said that 76% of millennials go online to start their mortgage journey. That's where they do all of their research. And the even more surprising bit is 70% of older generations also go online to start their mortgage journey. That's where the research occurs, and that's where you need to grab them. And that's what all this digital acquisition part of the journey is something that you need to look into. If we zoom out a little bit and just look at what's going on in the slightly higher residential real estate technology space, suddenly there's a whole lot more. What we saw from the mortgage space is just like one little bucket over there. And you've got things going on in lending software, how people are buying and selling their homes, and managing the property, and post-completion servicing. There is a lot going on. And then I'm going to zoom out one step further, and there's the fintech landscape. Now, all of a sudden, this is only fintech. If you go to prop tech and reg tech, etc., it just gets a lot more. This is opportunity, not really a threat. So, so that's what the technology space looks like from a innovation and developmental perspective. What about the consumer side of it? So we conducted some surveys led by my colleague Rachel Sam over here from our marketing department. And we did some surveys with lenders, consumers, and brokers, and this is what we learned. Just a few highlights from our consumers. 70% would use digital signatures. That's pretty good trust over there. We use digital signatures quite generally with a lot of places these days. So people are quite comfortable with this technology now. It's not new stuff that they don't trust anymore. And again, it's available technology. 71% would use online ID verification. And this is not the old, the Experian ID checks that we used to do. This is actually, if any of you have opened a bank account with, say, Monzo or one of these new banks, it's a 5-minute account opening process where you take a selfie and you take a picture of your ID documentation, and it does the very high fidelity AI and machine learning based checks to verify you into the account. Again, this is also technology that people are getting quite comfortable with. And then we found that 43% of people would use open banking. Open banking slightly is still a little bit more hesitation, 43%. It's not extraordinarily high, but this is emerging new technology that's asking for access to your bank statements directly, but it's rapidly growing. So what I don't have, the statistics look like that in terms of adoption. It's a rapidly accelerating tech. One of the high street lenders recently put out some statistics where they, in their direct-to-consumer journey, they allowed the customers to either upload a bank statement or share their bank transaction data using open banking right next to each other. 80% of people actually chose the open banking journey as opposed to uploading bank statements. And those who did start the journey, 94% completed the journey. So, the technology works, the trust is there. And finally, we found that 67% of consumers would explore their mortgage options with the broker if they were contacted before their deal ended. There is a huge opportunity in servicing the customer post-completion. What we generally do in the market today, as I'm sure you're well aware, whether it's brokers or lenders, is once the mortgage is completed, we forget about that customer until it's time to renew 18 months down the line, 2 years down the line. That whole opportunity to build that rapport, create that loyalty, upsell, cross-sell, that's all completely lost. Not only that, when it actually comes to renewing the deal, switching the deal, remortgaging, the statistics don't look very good. You know that we've got 2 million odd households that are on the SVR, and only 25% of consumers actually switch on to a new rate in time. That's not really, I don't think, due to a lack of great technology. Again, it's just things that are just falling through the cracks sort of thing. What I would like to add there is, I think a lot of brokers do contact their clients, but contacting them impactfully. I get messages from my brokerage, and they would say, your mortgage is about to end, call this number. That's it. There's just no more context. When should I contact you? Why should I contact you? If I don't change the rate, then what happens? How much more will I end up paying on my SVR? If I do change the mortgage, then how much could I be looking at saving? If they told me all of that, then I might be much more willing to respond. So again, the technology is there, it just needs to be adopted. The third driver of change that I'd just like to talk about is that consumer expectations are changing rapidly, and what they expect will determine our success or failure. So we know that we can open a bank account in 5 minutes on Monzo. We can invest using tools like Nutmeg and Wealthfront and all of these digital tools. Even our kids' pocket money has gone online with apps like GoHenry, right? People are expecting things to be very smoothly digital, and yet in mortgages, why would it actually be any different? But all we have in mortgages is lots and lots of friction. It's still paper-based, manual, face-to-face. It's not that slick experience. So what people really want it to be quick. No surprises, they want it to be slick. And they just want it to be stress-free. And at least on that third point, everybody would agree that mortgages are still a very stressful process. So we do need to do something about it as an industry. So just looking a little bit deeper on what is it that consumers actually expect. A simplified mortgage journey is a top 3 driver of loyalty. So if they had a great customer experience with yourself once, then that drives them coming back to you again and again. So it needs to be simple for them. Consumers expect instant gratification. Why wouldn't they? They can do everything else super quickly. Amazon, Deliveroo, everything else. Of course, mortgage is different, but from the consumer's perspective, it's just the experience that they want. So 84% of mortgage customers want an expedited mortgage process. I don't know about the other 16%. Maybe they believe in, slow and steady wins the race or something. Why would you want a slower mortgage process? But there you go. That's statistics for you. Automated and personalized. 2 in 5 customers think that robo-advice will be faster and more convenient than human advice. I know all of you are going to collectively puke right now. Yeah, so that's the consumer opinion. Of course, we know that mortgages is a whole different beast. It's very complex. There's complex situations. Advice is very important. I don't think that takes away from any of that. But there are lots of points in the journey where if we use automation, and it's not quite robo-advice, but other automated tools, I think it would be a better outcome for consumers as well as brokers. Early research, for instance. You don't need to be qualifying and verifying customers at the early parts of the journey yourself. You can use a chatbot there, qualify them, triage them, show them some options, and then intelligently pass them through to the right advisor at the right time. And finally, they want it to be mobile first. So 3 in 5 customers would be willing to use their mobile to buy the mortgage. Right? So these are digital native customers. The average first-time buyer, I think now is 31 years old, right in the middle of that millennial age group. That's a digital native, a mobile first consumer, and that's who's coming through the pipeline in the future years. Gen Z, whoa, that's even scarier. Okay, so having said all of that, that's been mostly about, look, what are the drivers of change? What's happening from a few different kind of perspectives in the market? To address all of that, finally, what is actually available from a digital technologies perspective is what I'd like to take you through on this particular slide. So let's begin with chatbots, digital fact finds, and unified research tools. Okay. So there is a lot, again, technology available out there. I've just used a few samples here. These are not particular companies that we're working with or advocating for or anything like that. They're just people that are either providing these technologies or they're people who are using these technologies well, and I just want to use them as sort of case studies and discussion points here. Personetics is a chatbot provider. It's an AI and ML-based chatbot that's able to triage customers. It's able to deal with early customer conversations, deal with the basic FAQs, and capture that customer into a qualified inquiry. I'm sure you've all gone and had a play on Habito and Trussell, and you know how they do their digital onboarding journey, right? Quite a nice little slick form, collects most of the information upfront, shows them a few options, and it caters to what that digital consumer wants at the front end of the journey. Right? They want to know whether they qualify for a mortgage, especially first-time buyers. They don't know very much at all. They might go on a money supermarket, they might go on broker sites, they might go on lender sites. What they're essentially looking for is, do I qualify for a mortgage? How much can I borrow? And what sort of rates am I looking at? So what is my monthly payments going to be? There is very rarely a consistent and good answer to that simple question. And I think that using these kind of unified research tools that bring you a clear answer to those questions, you can provide something of value to a customer that's come in cold to your web shop front, establish a bit of rapport, you've given them something of value, you've told them something about their options, but you haven't taken away anything from the value that brokers add. Because let's face it, mortgages are still very complex. Just by giving them a little bit of automated options up front, they're not going to go anywhere else. I think they're just going to trust you more and want to talk to you. The next little area I'd like to talk about is there is a whole lot of open data, open finance, open banking. We'll talk about open banking a little bit more on the next slide, but there is so many sources of verified data available today. I've just chosen a few to highlight the point here. Equifax can provide us direct access to credit files. I know that even today we ask our customer to go and sign up on Check My File or whatever and pay that subscription fee, and we've had to do it recently. It's such a big friction. I had to tell my wife how to do it. Actually, no, she taught me how to do it. and you know, it was just lots of friction. But in our software, we actually have an integration into our CRM system that we provide, from where a broker can click a button, pay a small fee, and just extract the customer's credit file right away without all of that friction. There's people like AccountScore doing open banking, which I'll talk about a little bit more in the next slide actually. And there are other sources of income data, like Mishto is bringing along payroll access, so you can go directly into payroll systems and extract data instead of asking for pay slips. This is new stuff that's coming up, okay? So I'm talking about like some cutting edge stuff over here. So it's not widely available yet, but it's emerging. And then there's companies like Validus who are using aggregation technology and API technology to connect all of the accounting software systems like Xero and Sage and everything like that to bring together a clear view of what might be going on in the self-employed world. And then you've got really good communications and collaborations tools, right? Sweetbox is an example of where you can have a virtual advice session with a customer. You can have digital documents pop up that you can share with them and get them to acknowledge, get them to sign them in that live video session. And the whole thing is then saved, recorded and saved in a completely, legalized, auditable format to bring that compliance element to that conversation that you've just had. There's tools like Intercom, which help you manage support in a much more automated way. These very much are based on artificial intelligence. So as you do more and more support, they learn from the answers that you've given, and they improve their own ability to self-serve in that kind of learning loop. It gets better with what you teach it. There's tools like Glia, which is a multi-channel, and actually MessageBird as well, which is a multi-channel communication tool, so which will allow you to talk to your customers on Twitter or WhatsApp or Facebook or Messenger or wherever they are, and bring all of that into a single unified stream so that you have a single record of conversation across channels wherever your customers want to talk to you. And these are actually available today. The next little piece is AML, KYC technologies, and other little bits and pieces that can accelerate this mortgage journey. Onfido is a good example of the digital verification service that we just chatted about. This is probably the largest provider of digital verification technology in the market today. Very much based on artificial intelligence and machine learning technology, computer vision technology that identifies documents the authenticity of the documents, and the proof of ownership of that document is verified at a far greater degree of accuracy than any kind of human process we've had so far. We've got better automated valuation models. This, of course, lenders are adopting a lot at the moment, again, forced by the changes in due to the COVID environment and so on. But I think it also has applications for mortgage brokers. A verified or at least a validated valuation in start of the journey is cleaner rather than finding out once the surveyor has gone out that actually it was poorly valued up front. There's e-conveyancing, and there's lots of other property data as well, search flow and flood risk data and so on. So the other bit is about, we've talked about document collection and verification, so just digital signatures. There's other software emerging that uses OCR, or optical character recognition technology, again, AI. What that does is you can just feed all the documents into it, and it reads all of those documentation and populates your fact find or wherever it is that you want that data to end up, that it will do that automatically. And there is plenty of management information and analytics technology that you should be using as well. I think of Google Analytics, obviously, and Hotjar. So we just talked about how do you acquire customers online, what does your website do for you in customer acquisition. Websites need to be optimized over time to increase the conversion rate of inquiry, and things like Hotjar and Optimizely will allow you to optimize that conversion rate. So Hotjar is something that looks at funnel statistics and tells you how many people landed on your website, how many actually went on to opening the inquiry form, how many then completed the inquiry form, and so on. So you can look at that and use those KPIs to improve that journey over time. So there is just a lot of stuff out there, and I just wanted to give you a sense for what's available out there to bring that to your mind on this slide. Now, what do we offer from Finova that can actually help you with all of that? Well, ta-da! Pretty much all of it. So, as I said, we are the #1 software provider to the mortgage market. We offer stuff to lenders as well as brokers. We've got our head of commercial who's just joined us, Dave Bennett over here. So he's the man to talk if you're a broker, which the majority of you are here. If you want to take advantage of any of these technologies from the Finova perspective, go speak to him. We have a stall here today. We're doing demos. Have a look. Finally, I just want to cover a little space, which is something that I personally am investigating a lot in this particular space and thinking about how do we make this work in the mortgage space. And that is to do with open banking and open finance, which we've touched upon a little bit, and artificial intelligence, which we've touched upon a little bit. And how do these two technologies come together to offer practical benefits to both lenders, brokers, as well as consumers in the mortgage market? Okay, so I just want to talk about a few kind of use cases. So open banking, I'm sure all of you are aware, but just in case, open banking is technology that allows you to have direct access into consumers' bank transaction data. These days it also includes credit cards, other things like pensions, and everything is also slowly coming into what is the wider space for open data and open finance. What can we do with that? At a simple level, there's automated population of fact finds. You send a fact find. If we have open banking connected to it, a lot of the data, the questions that you're asking can be pre-populated in there, income data, expenditure data, etc. They use categorization, which is underpinned by AI and ML, to categorize the expenditure data and the income data and populate that into either fact finds or budget planners. That saves time. It also helps us do intelligent affordability assessments, and it includes payroll access, as I mentioned earlier. So, clearer assessment of affordability. It helps us do aggregated accounts. So, if you're looking at multiple applicants or even a single applicant with multiple accounts, this can give you a view across all of their financial data in a single aggregated P&L, if you like. AI-based categorization I already mentioned. Now this can be used to auto-create budget planners. Simple passover of bank statement data. I've put that over there, but of course you know that there isn't a whole lot of lenders who are accepting open banking bank statements at the moment. There are task forces around that. We're trying to convince the lenders to adopt open banking. There's a bit of a chicken and egg in that situation, in that whole space right now. Lenders can't adopt it until lots of brokers are doing it. Lots of brokers can't adopt it until lots of lenders are doing it. So we're trying to find a way around that. But an ideal journey would be a consumer comes along to a broker sends them the opportunity to provide their bank data through open banking. That then gets stored in a secure vault, which then when the broker submits the application to the lender has access to directly as well. So the consumer only does it once, and then the data is shared and flows through with the consumer's consent to both the broker and the lender. That's the ultimate that we want to achieve with that. Data extraction from paper documentation we've talked about, automated risk factor identification. It's a little benefit but of good value to save money for brokers, where you might generally be looking at bank statements and scanning them for risky things like payday loans or gambling behavior and things like that. All of that is easily automatically identified through open banking technology and AI, and that's just presented in a little checklist for brokers and lenders to review instead of having to waste 20-30 minutes looking through bank statements. There's been a lot of talk recently about identifying and helping vulnerable consumers. We know that consumer duty regulations are coming, which is going to elevate what we need to do from that perspective of helping vulnerable customers. Now you imagine what open banking can do for us in that space. Right? It gives us a much more accurate view of their financial behavior than what credit files used to be able to do, and it helps us predict trends. It helps us understand what might happen with this customer in the near future. So using that, we can build ability to identify vulnerability in there and also identify ways of actually helping that customer. You can also better service your customers on an ongoing basis post-completion. Again, it comes down to having a customer monitor that allows you to keep abreast of that customer's situation. So there could be changes in their life events. That's a trigger for you to either have an advice conversation with them or have a protection sales conversation. It allows us to pick up those life events if you have recurring access to their open banking information and react proactively to the changes in their situation. And there is also scanning for better rates. I'm sure you guys have all come across the products in the market that allow us to scan the market for any potential better rates for our customer. Now, the other side to that you need, if you're ever going to recommend to a customer that they switch products before the end of their deal, is the customer's view, what's happening with the customer. So bring those two views together, the market view, the view of rates, and the customer's internal data view, and then you've got something that's quite powerful to help you potentially switch rate within the initial rate period. And finally, also, it helps you to work with a lot more complex customers, complex income situations, more data. So you have a more holistic view. You can help customers who you may not be, very much in the core of your expertise zone. So that's just to give you a bit of a sense and flavor for what these kind of technologies can help you do in a practical sense. So I'll leave you with that, and I think I'm obliged to call out a bit of learning outcomes. This is, after all, a CPD session. So my hope was that you would take away a bit about what open banking technology can do and how it can improve customer outcomes, what there is in terms of practical applications for artificial intelligence and machine learning technologies in this space, and how it can help brokers be more efficient, offer better customer experience, save money, and so on. So I hope that has been useful. Thank you very much for your time, and open to any questions. Thanks, everyone. Thank you.